Hello, I'm Liz Lumley, and this is Finextra at Sibos, and I'm speaking to Werner Steinmüller of Deutsche Bank. And of course, we're going to talk about the massive amount of change going through global transaction banking at the moment. Give us some insight on how the dialogue has really changed in this industry.
Now, transaction banking went through a real shift in the last 10 years. It was partially seen still as an operation department, but with all of a shift in the banking and the record side going on, it's now in the focus. A lot of the banks investing in it, and I see an increased competition in transaction banking, and it's much more in the focus. With all this world where bankers a bit sidelined and the contract between the banks and the relationship is broken, we are absolutely, transaction bank is a pearl, because what we can do, positioning ourselves in helping the corporates to move money around, to make secure payments through letters of credit in difficult countries and clearing the security side. All these are needed by our economy, and it's really related to the flow business and not speculating.
Yeah, it's that real sort of trade finance sort of type of services globally, which is sort of, it's a really...
Trade, it's cash, it's securities, because all these things are moved around the world, and there's underlying businesses. I think this is a key difference, underlying flow business to support all of the businesses going on.
So outside of the themes of Sibos that we're all aware of, Deutsche Bank has a white paper out on them. What are some of the themes that the industry is really concerned with right at the moment?
There's one word.
Yeah, I think I know what that is.
Regulations. Yes. You know it. And this is talking about CRD4. I'm not talking about limitations of salaries, which many things is very personal. I think this can be solved. It's much more of a leverage ratio. What I'm criticizing here, the regulator, is we're not differentiating between a structured product from an investment bank with a letter of credit. Yes, it has not the full weighting. However, they moved trade-related business from below the line above the line. This means it's more difficult. Second thing, now for commitment for corporates, liquidity commitments, 5 years revolver, if they're used or not used, is 100% counted under the leverage ratio. A lot of these things will impact the corporates. And this is what the regulator should recognize and take actions about it. It is on a test phase, so I hope in the next year when they see the consequences, they amend these regulations.
So yeah, the banks right now are under a lot of pressure to change and really rebuild trust. How do banks achieve this while dealing with the massive amount of regulatory uncertainty there is right at the moment?
We have to change. When you think in special transaction, everything is legally right, you do it, it's not good enough anymore. You have to think really, what does it mean? Is there a really underlying business, or is it only tax arbitrage? I think these are the things people have to count much more. Banks have to change. They have to change the integrity. Look much more to the consequences. And there's a good phrase. When you decide on a transaction, behave like the regulator or the tax authorities would be sitting next to you if you still would do the transaction. I think this is a very simple phrase to count what you have to do. We also have to look not for the quick profit, we have to look for sustainable profits. We have to look to client-centric, not what is good for the bank, what is good for the client. And if you're following some of these basic rules, and Deutsche Bank started a huge program, and it's coming from the top, change the culture. This is not happening overnight. This is a journey we have to go, but we have to go the journey, because otherwise we're getting more and more regulations. There could be a point we are losing the license to continue our business. And this is what we have to avoid, but I'm confident all of the banks working very hard on it to achieving this cultural change. It's not only Deutsche Bank.
So we talked a bit about how the industry has changed and the change that global transaction banking is dealing with currently, but here's a bit of a crystal ball time. What shape will the industry take in the future, in the next few years?
It's very interesting, because now it's much more in the center. Banks discover this is a very good business, we have to invest in it. When you're investing, the most easy product to invest is in trade finance. Letters of credit, bid bonds, performance bonds. You don't need a lot of infrastructure. So this is really what I'm seeing. If it's more complex products, supply chain, structured export finance, it's less. The same is on cash management, internationalization, go to Asia. A lot of investments are happening, but you need very good infrastructure. If you not have good infrastructure, it's very difficult to compete. Infrastructure means on the cash management side, on the trade finance side, on the security side and on the trust side, and have straight-through processing. I hate paper. Paper is for risk. I hate also checks. Can't be efficient. I like straight-through processing, yes. And also you can do automatically reconciliation of the incoming payment with your receivables account, and this is what we have to do, and to be very sophisticated.